So okay, so let's say we have a structure like this, market breaking structure to the upside, break of structure, right, to the upside. And what do you see happen? Market people be anticipating to buy from this other block here or this other block here. But what do you see happen? Market aggressively broke below these two other blocks. Now, instead of we calling them other block, now we call them what, a breaker block. So a breaker block basically is what, a failed other block. So now if you have situation like this, how do you take your POI? How do you take your POI? That's where these four rules, I'm going to explain to you guys. These four rules I will explain. That's how you will take your valid POI, a POI that is going to hold, the one that you know is going to hold. Now, these rules include number one, presence of what? Of a market structural shift or a break of structure. There must be what? A market structural shift. Now, if you observe, these two zones have what? A market structural shift, or a break of structure. It depends on direction of the market. In some cases, it's going to be a market structural shift. In some cases, it's going to be a break of structure. But I'll explain that later. Then there must be what? A presence of liquidity or inducement. That's where, if you narrow these two other blocks down, I said there is going to be what? A presence of liquidity or inducement. As I said in our previous classes, I said inducement can also serve as what? Can also serve as a liquidity, a point of what? A point of liquidity, right? A point of liquidity. Now, let's say this is my inducement, and I said inducement is the first pullback after a market structural shift or a break of structure. The first pullback after a market structural shift or a break of structure. That's your what? Inducement. Let's say we have our inducement to be this level here. To this, that's our inducement, right? So where do you think I am going to take my trade now? From reading from the rules, let's say the inducement is closer to this breaker block. Now there should be what, on mitigation, meaning the breaker block must not have been mitigated. It should not have been tested before. There should be what, on mitigation. The breaker block should not be mitigated. I believe you all know what mitigation and on mitigation is. So there should be what, on mitigation. And the last rule is what, you should choose the POI close to your what, liquidity or inducement. Now, according to these four rules, I said there must be presence of what? Market structural shift, presence of what? Presence of the second is presence of inducement or liquidity zone. And then the third thing is the points of interest must be what? The points of interest must be unmitigated. And the last thing, choose the points of interest close to your inducement or liquidity zone. So these are the four rules you should always take note of if you want to choose your a valid point of interest. These four things, if they checked out, then you should what? That point of interest is going to be a valid what? Point of interest. Now I'm going to show you on a live chat how this thing works. But now, just take a look at this. If I'm going to use these two breaker blocks, am I going to use this one? No, I'll not use this one. Instead, I'll use this one. Why? This one has the inducement closer to it and fits all the rules I mentioned. It has what? A market structural shift. The zone have not been tested before. It has another one that on mitigation, it has an inducement, and then the inducement is even closer to it. So all these four rules are checked out. So if market should what, do something like this, give me another break of structure, or maybe do something like this, then I should be anticipating to sell from here, and then what, target the recent of external liquidity or the last low, because market is going to do something like this. I'll take my entry from here. Stop loss just above what the other block, few pips above the other block, then target this one, right? So that's the essence of breakout block. If you study the market recently, this is what has been trending. Like if you observe the market, in fact, I have two setups here that are breakers. In fact, they're up to three. I'll show you all of them. So if you study the market closely, you observe that breakout blocks have been what have been so trending like recently. Have been trending recently instead of other blocks. You just mark out your other block, waiting for price to come back to it. But instead, markets have what use the breakout block instead of your other block. So there are certain cases your other block, your extreme other block might not hold, but instead your breakout block will be the one to hold. So let me show you on the live chart. Now I have the setup here. Though I know it was not going to hold. Why? Because the momentum was so strong. When you see that a momentum is so strong on a nonce, if I didn't mean this is going to hold, but I have another setup too. I didn't mean this is going to hold. I know it was not going to hold. And again, there was news. But I've already done my calculation. Like I wasn't risking too much. I was okay with what I was risking, so I left the trade to run on its own. Or we all know that this is trading and anything can happen. So I just feel like okay, let me leave it, let it run. Either SL or take profit. So I didn't care. I didn't care much. I could have closed out early, chicken out. Let's say like some people, I could have chicken out when it tapped into my point of interest and gave me a strong what pullback. I could have what take my take profit from here, but no, I just let me leave the trade to run on its own. So now let me break it down for you guys. And the reason why I even took this, let's forget about the reason why I took the trade. I was expecting what price to what, to come back to this other block. I was expecting price to come back to this other block. I think I used the 1 hour other block. So I was expecting price to come back to this other block here. I was expecting price to come to this other block. This is the other block here. So what you see, price came back to it, respected it, and bounced to the what, to the sell side. But if you observe, the momentum, the buy momentum was so strong. When you see on a nonce, the price was supposed to be doing something like this: higher high, higher lows, higher highs, higher lows, higher high, higher lows, higher high, higher low, higher lows, higher lows, and tap into my point of interest and begin to sell again, higher high, higher low, higher. That's how what market supposed to work. But what do you see happen? Instead, market aggressively approaches my point of interest. You can see there is no sell in between. So the buy momentum was so strong. I know that the zone will not hold, but I wasn't risking too much. So I know, okay, let me just let the trade run. Anything can happen. Market might decide to rush back and what feel this imbalance here. But you see, market broke above it. I know it won't hold, but I didn't care much. So I was expecting price to what, come back to this other block. Many people will have marked this other block as their point of interest to sell. Why? It gave us what? A market structural shift. Price was reacting from what? From a daily what? A daily order block around this zone. If I should go to a daily time frame, you observe the price was reacting from a daily time frame. That is why it pushed down. But the general structure is bullish. So I was so confident that okay, since price is reacting from a daily or supply zone, that's what an order block, that's the supply zone, order block, and price gave us a market structural shift, an internal market structural shift. That means price is what about to sell towards our what our points of interest below here. That's which is also a breaker block, right? So I saw my market structural shift and then my inducement, which eventually turned to what turned to a inducement, which eventually turned into a market structural shift after market was failed after this other block failed. So this inducement level telling me that what let me go to 30 minutes. You can see after this structural shift, the market gave me the first pullback here, this first pullback here. See this first pullback, which is my what inducement, which is my inducement. Market came all the way down, and then what it was supposed to come all the way to my what my point of interest and begin to sell off. But what you see, the momentum was so strong, and market instead, and this other block instead what failed, and market broke what through it. So when a market breaks through or when another block fails, a market breaks through it, we call it what? A failed order block, which is now what? A breaker block. A breaker block. So if you notice, there are two other blocks here. We have one here, and then on the 30 minutes, we have another one here. So is this one that now they are waiting for price to come back to take my what? To take my buy from. This is where that's where you see my entry here. This is what I'm looking for. There is what another breaker block here. Now, mentioning like following these four rules I mentioned, following these four rules I mentioned, I think there must be what? One, a market structural shift or what? A market structural shift or a break of structure. But now what you see, there's a market structural shift. So we have two what? We have two breaker blocks. So this is a breaker block and 30 minute time frame. This is what? A breaker block. These zones we are seeing are failed order blocks. They are failed what? Order blocks. Failed order blocks are what we refer to as what? A breaker block. So, like the example I showed you here, where is the example? Like this one, you can sometimes have two other blocks that market aggressively break through, just like this one, just like this one here. This is another block. Markets can sell from, decide to sell from here, but market broke above through it. Market can decide to sell from here, but market was broke through it. So after market have broke through this breakout block, what am I expecting? I'm expecting market to do something like this, come back, give me an inducement, either to this breakout block, but you can see this breakout block have been what? Have been mitigated, meaning it has been tested. Market have mitigated it. You can see market have tested it. But what this market did, market came to what? Close, give me an inducement, close to this my breakout block here. So what do you expect? I'm expecting market to do something like this, then come back and tap into this breaker block and then buy with what? Buy with the market. Now, from what I mentioned, all the four rules checked out. This is the inducement. I said first, there should be presence of market structural shift, right? Or break of structure. This is also market structural shift, the external shift. Market broke through this other block here. There should be presence of what? Market structural shift or a break of structure. Then the second thing is what? There should be what? A liquidity point of a liquidity or inducement zone. An inducement can serve as what? As a liquidity or inducement zone, right? So the next thing is what? There should be on mitigation. You can see this breaker block is already mitigated. So we are no longer interested in this one. So let me delete it. It's already was mitigated. So I don't have business with it again. Then the one that is what left to be mitigated is this one now. And what do you see? And then the fourth rule says there should be what? There should be choose the breakout block close to what? Close to the point to liquidity area or what? Inducement zone. What do you see? It's only this breakout block that is what close to this inducement. So there is high probability of price was coming to this breakout block and what continue to what go with the trend. So even if you chop SL on this one, you already know you've done your analysis and all your what criteria checked out. In fact, it is a risk worth taking. Are you getting it? There is what we call calculated risk instead of you vibing through the market. So now this is the kind of calculated risk we're talking about because you've done your analysis, everything you needed checked out, right? Everything you needed checked out. So everything you needed checked out. This 100 and what I want to do right the next one. Okay, so sorry about that. Okay. Where was I? Okay, so now basically this is the only breaker block close to the inducement, right? This is the only breaker block close to the inducement zone. So guys, this is the what a valid point of interest that market might probably what come and what test it and begin to what buy with the trend. Now looking at the let me another breaker block example. Now look at this zone here. What do you see happen here? Check this zone. Market gave us what? The recent break of structure, right? To the downside. It was on the downtrend. Break of structure. If you market structural shift from the upside, break of structure, then this is the last break of structure. And then market came back. I said the first pullback is your what? Is your inducement, right? Now look at the inducement here. That's what our IDM, right? The inducement. I said the first pullback after a break of structure or a market structural shift is your what? Is your inducement. So you can see this is the inducement here. And then we have our order block here, right? This is our order block here. This is our order block. So many people be anticipating for what? This is what people will be expecting to do. They'll be anticipating that market should instead do something like this, tap into this what order block and begin to sell off with what the actual trend. But what this market did, market bounced from what a 4 hour order block. This is a 4 hour order block. This zone you see is 4 hour block. Market bounced back. Instead, gave us a market structural shift and then we'll tap into a 2 or a 3 hour order block with inducement also. And the market aggressively broke above this hour. These are order block, which is now what? Which is now a breaker block. On a norms. After market break above this, you can see the first pullback. This is the first pullback, which is our engagement here. And then you can see market traveling here. We are expecting market to come back to this breaker block and then buy what with the trend, right? That's what we are expecting the market to actually do here. I get in it. So that's breaker block. Now let me show you more example of. I think we have one on UJ. There's one on UJ. USD. Okay. Yeah. All right. Okay. Let me delete this. Can you still hear me? Are you guys still with me? Hello? Hello?
Yeah, we can see you.
Okay, now that's good.
Yeah, we can hear you.
Okay, that's good. Now look at this structure. Market breaking structure to the upside, right? Break of structure, break of structure. This is the recent break of structure here. And then what do you expect? Market gave us what our first pullback after the break of structure. So this be our inducement zone, right? This is our inducement zone. Then meaning this zone is what is a valid what is a valid order block point of interest. All these things checked out, a break of structure. Oh shit, running out of time. I didn't know we spend much time remaining. Okay, we have 9 minutes left. I think we'll just round up. Okay. We have a valid what point of interest there, which eventually what this market did. Market gave us what our inducement, break structure. We are expecting market to come back and what buy with the trend, right? But what this market did, market instead, the other block instead failed. The other block, lá acho que eu até o radio ajuda do acho que eu até so sorry so okay so instead what you see market did market aggressively broke through this other block. Can you see what happened? Right? And then market came back and used the zone as well as a breaker block. I get it. Are you getting it? Are you getting it? Are you guys getting me?
Yes, I can hear you. I can hear you.
As we so market instead use this zone as what as a breaker block. If you go to a more lower time frame, if you refine it, please can you mute yourself?
Somebody is sitting and snoring.
Please mute yourself.
Wait, you're sleeping?
The person is sleeping. Imagine. Imagine. Okay. I give me everyone. Uh, 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 Okay, okay. I think that's all. So let's go back. Let's get back to business. We have 7 minutes. Okay, so you can see this is a breaker block also. Now we have another one on GBP, JPY. Um, R. I have the zone here. You can see market gave us what a break of structure here, and then the first pullback. I said the first pullback is your what is your engagement zone, and then we are anticipating to what to buy from this zone. And what do you see market did? Market was supposed to what, come back to this zone and what continue to buy after ranging for a while. It was broke below it aggressively, gave us what? Gave us an inducement just close to my what? My breaker, my order block, which is now what? A failed order block. And we now call it what? A breaker block. And what do you see market do? Markets now what? Sold off from what? From there. That's the essence of what? A breaker block. That's breaker block. Recently, I observed in the market that breaker blocks have been what? Happening a lot in the market instead of what? Other blocks. So if you have been trading from other blocks, you notice that you miss entry so much because markets have been what? Markets have been traveling from what? From breaker blocks instead of your other blocks. So if you guys have any question, you can ask me now and I will attend to them. If you have any question, we only have 6 minutes left, or we're running out of time. We have 6 minutes left. So if you guys have any question, please ask. Ask question, ask question. You guys should ask me question. If you have any question for me, please. We only have 5 minutes left. Do you have question? Can you all hear me?
Yeah, I can hear you. So no, I don't have any question.
So it means you guys don't have any question. Okay, that's good. That's good. Or Steve, do you
I
want to
do
ask?
have a I do have a question there.
Okay, what's your question, please?
Can you explain this very same order block? I mean, briefly, since we don't have much time on this GDP and this thing.
Sorry, I didn't get you. Say what? Can I?
Hey, can you explain this same thing on this GBP I mean, very briefly, since we don't have much time.
Okay, I should explain this structure. This structure you're seeing.
Yes.
Okay, okay. This is what happened. This is what happened on GJ. Market was what? Market gave us what? Okay, that's structural shift. Market structural shift. And I said from our rules, let me go back to my rules. Always have these four rules at the back of your mind to identify a valid what? A valid POI. Now, there should be a presence of what? A market structural shift or a break of structure. There should be what? A presence of liquidity or inducement. And there should also be what? On mitigation. Then you should choose the POI that is close to your what? Liquidity or inducement. Now, let me go back to the GPY, GBP, JPY. Okay. Let me go back to. Now, look at it. There is what? A presence of what? Market structural shift, right? Normally, when there is a market structural shift, you look for what? The origin that gave you that shift. Or when there is a break of structure, you look for the origin that gives you that break of structure, right? So the origin that gave us the shift can be this one. We have several other blocks here. There's another block here, two, and there's another block here too. But then the second rule says you should what? There should be an inducement or a point of liquidity. And I said your point of liquidity is what the first retracement after a break of structure, a market structural shift. Now look at this. After this break of structure, this is our this is the what the pullback after the break of structure. Then this zone will be our inducement zone, right? Then the second rule said there should be on mitigation. This level has never been tested before. You can see no points have tested it before. Even this zone did test it. This zone too was not tested. Then the third thing is what you should choose the zone that is close to your inducement. On a note, looking at these four rules, I'm supposed to use this zone as my what? As my buying point or my point of interest, right? I could have set my what? My buy order here, right? Then set my SL just below it, waiting for price to buy. But what do you see price did? Instead, the order block failed. It failed woefully. In fact, it broke aggressively through it. So what do you notice? Price broke aggressively through it, right? So I said a breaker block is what? A failed order block, meaning this zone has failed to hold as another block. Now it's now what? A breaker block. So instead, since I've seen that price have aggressively broke through, I'll wait for what? I'll wait for several confluences to what? To look for what? My entry. Make sure that this zone is actually a valid breaker block. The first thing is what? I'll still apply the same rule, the market structural sheet. One, market structural sheet. God, we have 1 minute. We have market structural sheet. One. The second thing is what? There should be an inducement zone. Now, let me zoom out. This zone, I said, after a structural shift or a break of structure, the first pullback is your what? This is the first pullback. Now is our inducement. Then the third thing, on mitigation, you can see it has never been tested after this pullback. Then the fourth thing, you should choose the other block or the zone close to your inducement. Now, this is the only zone close to my inducement. And when this price respected that zone, after I will take my trade from here, my entry from here, right? My stop loss just above this zone. Then what? Sell targeting this external what? Rate liquidity. That'll be what? That'll be a 1 to 5 RR. And it will be a perfect trade. I get in. So that's that. We have less than 1 minute. Steve, did I answer your question or did you get it clearer now?
Yeah, thank you.
Okay.
It's a lot understandable this time.
Okay, that's good. So if you guys have any question, you can drop it in the private group chat. You can drop the question or you can send it to my DM, okay? So for now, we have a limited time. Our time is over. I have to end the call. So see you guys in our next class. I'll send the video to you when it is ready. All right. You guys should have a wonderful night. Good
Okay,
night.
thank you.
Okay.
Good night.
Uh-huh.